Hey, good afternoon. Hope everyone is well. Today, we are going to be talking about this program and hopefully not spending too much time in the PowerPoint. Because if you follow me on Instagram or TikTok or YouTube Shorts, you know how I feel about vendors who spend most of their time in PowerPoint presentations. And so, in a nutshell, what we have to offer you today and what I'd like to demonstrate pertains to time and the predictability of markets. And I want to go over some things and show you what we mean by that. We are the only company, so far as I know, there may be others, but so far as I know, we're the only company that is putting out predictive times and directions for the markets a lot of traders are focused on, and then coming back and looking at what happened at those times days after the fact. And so you're kind of part of an interesting experiment where if you've been taking the test with us, you've been looking at the forecasted times for the markets and wondering if they were going to work or not. And so we're going to focus in a moment on this chart in particular. It's the one we kind of look at as our go-to chart, the E-mini S&P. Hey, Stephen. Hey, Chris. Graham, good to see you. John, welcome. Barry. Is there anyone here who does not own the software today? Anyone here who's sort of checking us out for the first time and would like to focus on a market that maybe I'm not necessarily looking at? Is there anyone here who does not own the software? Hey, Evan, what markets do you trade? Just so I know to focus on those a little deeper than the ones I normally look at. Okay, perfect. ES and NQ. We'll look at both. So, Evan, before the markets open today, right, we had access to this chart. And this chart was answering a question for us. In essence, we wanted to know if there were any possible movements of the market we could anticipate before we got there. And so all these times are Eastern time, by the way. New York, East Coast time, ET phone home. And the program had gone back across thousands of historical bars. We've been doing this for almost 16 years now. And it identified times in the past, Evan, where patterns appeared. Things keep happening at certain times. Does that make sense? And all of the times on the bottom of the chart are times historically where, for one reason or another, markets are being pushed up and pushed down. And so on Tuesday, we had this chart available for Thursday. We also had one available for Wednesday. That information was processed and published and ready for us to follow along with and examine. So the idea of this working in any capacity seems absurd, 100% absurd. And so before we look at that chart, I wanted to show you something else that you might not have known about your beloved E-mini S&P. Most people don't understand how predictive the market they trade is. And so when you're first looking at this chart, it's hard to know what to think, right? Where are these signals coming from? And what do they mean? Evan, let me just sort of let you make a few observations for yourself. What would you say generally happens around the green signals on the E-mini S&P daily chart? In general, not all the time, right? Yep. How about the red dots? Yeah. So Evan, right here is a red dot. Right here is a green dot. Right here is a green dot. Right here is a green dot. Right here was a red dot, and so on, right? What's crazy, and I understand when I say this how crazy it is that green dot is a full moon. What's crazier yet is that red dot is a new moon. Yeah. Did you know that? And what I'm attempting to do here, Evan, is paint a picture of predictability for you. In fact, this isn't the only market that is predictable in that sense. You're going to learn a lot of weird stuff today. Your wife or life partner is going to have a hard time discerning the look on your face when you come out of your office here in a minute. And so over here, if we do the same thing, this is Bitcoin. And we're going to leave those same two signals on there. That's a Bitcoin chart with the full moon and the new moon on it. And if you're wondering if the dates are accurate, we can come here. And Evan, we can get all the dates for the entire month and for the upcoming year. It's public knowledge. So when we look at this, what tends to happen in Bitcoin when we get to a green dot most of the time? It goes up. What tends to happen to Bitcoin when it gets to a red dot? It goes down. And those signals are based on the size of the moon in the sky. Now, if you've taken my Omnia course, you know what's going on here. All the signals are reversed right now. Okay. And that means there's a neckline right here. And we closed below the neckline. The next signal is in 5 days from now, and that's going to be a red dot. And Evan, that means Bitcoin has lower to go. Let's go back to the E-mini S&P though, right? You now know something about that market that you didn't know a second ago. And so it stands to reason that those things are equally applicable on an intraday chart. Let's take a look. So Evan, here are the signals that we published on Tuesday for Thursday. So come back from the full moon example and take with it this possibility that the market you trade is more predictable than you thought it was. Does that make sense? There's an element of predictability that you didn't know about. And so when we come back and look at these times, these are the times that we were waiting for. Yeah, we'll come back and look at that in a second. It's pretty cool. All of this is pretty cool. But what I think is even cooler is look at what happened at the signal times 2 days after we published them. Do you see how it's behaving like the new moon and the full moon? If we change these to red and green, we knew the times in the future, we knew the directions in the future, and something pretty cool starts to happen after the fact, doesn't it? So it goes down from 925 to 950, this monster slide, and then Evan, at the close of that candle, it doesn't look like a lot, but look, it pulls up $6.50 before it drops down. On the close of the 1035 candle, it goes down $18. On the close of the 1055 candle, it goes up $15. On the close of the 1125 signal, it goes down $13. On the close of the 1330 candle, it goes up $4. And the most this goes down in the uptrend is $5. And then on the close here, it goes up $10. You with me so far? Okay. Now, there are 2 white dots in here that are weird. If you're an existing customer, what am I about to say about the 715 and the 850 signal? Anybody? You get a special gold star. Steve knows it. It perplexed him this morning. In your handout section, Evan, there's a book. And what the book does is it says, hey, every now and then, the signal, if it's positioned just right at a time, tends to do the exact opposite. Meaning, Evan, if we arrive at a brand new high at a time that was supposed to be a buy and define that mechanically, it tends to do this. Now, here's what I want you to see. This example is an NQ chart on a 1-minute time frame from 2016. It's 8 years ago this happened. This example from this book is 8 years ago. And what we do is we say, hey, if either the buying signal candle, the candle to the right or left, if any of the 3 of those are new highs in relation to the prior swing, we have an expectation of inversion or reversal. And it tends to do this. Yeah, including the wick. Any part of that candle breaches new ground. Ye freaking ha. Now, you can program that in to the computer. And the reason I don't show it straight out the gate is because, Evan, you're just learning about predictable times, right? So we don't want to overload you. But if you uncheck this box in the program, it's 6 lines down from the top, and hit OK, you're telling the software, hey, I want to see if any of those shenanigans occur. And now on the close of that candle, at 8:50, it goes, and that blue arrow appears. The better you get with this, the more comfortable you are with this, the more you can anticipate it happening in real time. So now, Evan, with the book that I've been publishing for 8 years, that's in the webinar handout box every week for years and years, and the times that we came out with on Tuesday, we're starting to paint an even more precise picture of what was expected to happen at 7:15 and 8:50. How cool is that? You freaked out a little? Who else is freaked out a little besides Evan? So 2, 2, 2, regular sell signal, number 1 buy, number 1 buy. The only one that doesn't really do much is the 810 signal, which up until the report is exactly where it's starting. Any questions? Okay. There was a pattern 5 yesterday, Evan, at 310 with the signals that we published. Yesterday was FOMC day, right? What was expected at 9:05 yesterday? A number 1. When we got to 9:20, a regular number 2, a plain old sell. 12:50 was expected to be a buy. It finally closes above the moving average here and takes us to 210. And then at 210, it drops right at the econ from 58 to 51. It goes $7 straight down. And then at 310, a pattern 5, which matches what? Our 8-year-old example. So if you wanted to sell that at 310, you'd put your stop where? Right above the high. Stephen, if you wanted to buy this, you had to wait for it to breach the high and break out. So Evan, how do you feel about yesterday's forecast? A little but it's FOMC day. There's another tool that we can use with the times to get even more times. Evan, I can take the blue signal and the white signal and I can split them into thirds. And if I split them into thirds, the next candle here is green, and then the next candle here is red. Yeah, you got a little knowledge now. Isn't it cool? And it's not just unique to today and yesterday. As we go further back in time, we can see there's a consistency to it, right? If we wait for the times and see, are you weird? I'm not weird. I'm a normal sell. I'm a normal buy. We have kind of a clue as to what it's about to do. There's Tuesday. Here's Monday. And then the further down the time frames we go, we can look at a 3-minute chart. You had access to those times yesterday. And Evan, we have a pretty similar perspective, right? Only there's more times because it's a lower time frame. And there's yesterday on the 3-minute chart. Kind of neat. If you want to go all the way down to a 1-minute chart, now you start to see there's some pretty cool stuff going on. And it feels like somebody's behind the curtain pulling all the strings, and the buttons are being pushed by them as well. Let's go ahead and load up the NASDAQ 1-minute chart. And Evan, just for chuckles and poops and giggles, I want to look at the very last signals of the day so far. We'll go look at the morning stuff in a second. But these signals are the farthest ones from the forecast, right? I always like to do this, if you'll indulge me. NQ 1 minute. the very last few signals. Whoops. 309, 331, 352, 404. 309, 331, 352, 404. You with me? So these were known since Tuesday. This is what's happening on Thursday. And this slippery turd of a market seems to have been pre-programmed to do some Wile E. Coyote Roadrunner stuff at these times, hasn't it? Somebody fired off a bot, an algorithm, or something on the tail end, as far away from the predictions as we could get, right? So all the way over here is this morning, at the end, as far away from Tuesday as we can get, it's still doing the weird stuff. Here's everything from lunchtime forward. Huh. That's interesting. Let's go back a little bit. Oh, even better. How do I trade this now? Well, there's a difference between the signal and the setup. Just now we were looking at the raw data. Did it go up at this time? Did it go down around this time? Is it generally moving in the anticipated direction? Yeah, that's not a trading system. That's just raw data. The setup says, hey, what are the rules? What are the rules of this information? So what we're going to do is say, hey, let's look at this 120 period moving average. We're going to apply it to the times when we get there. And if there's a sell signal, we're going to put a stop 1.5 average true range values away. Right? Pretty basic, adjustable, dynamic stop. We're going to hold that trade until the next signal. 917, that's an $11 move. Let's go ahead and increase the property of the text so it's a little more visible for the ocularly challenged like me. Woo! There we go. Now, 926, we get short. It hits our stop right before the market opens. We lose $12. The very next candle at 931 closes below the moving average, Evan. We go short. We have until what? 936 to get out. I think I went too big. That's what she said on the font. There we go. You with me so far? So there's a short here. There's a short here. Now here's an immediate benefit of the program. Most times, most people get out of the trade too early because they have no idea if it's going to go against them. They have no idea if it's going to go against them. We know from the program that there's a behavior pattern, a long-standing, very recent behavior pattern. And the software is saying, Evan, I'm not making anything up. I don't have a black box that I'm pulling stuff out of my rear end with. I just want you to know I've looked at the last several thousand bars of the NQ. And somebody somewhere is really excited about selling at 926 and taking profit at 936. So when you're short in your position, most traders, they get swept out right around the first sign of trouble. You're saying, I have 6 more minutes. I'm going to ride the bull. I got to hang on to the bull till 936. And I can't overestimate or overstate, rather. I can't overstate the transformation that occurs when you have a reason to stay in a trade beyond the voices in your head. Okay. So now, the next signal coming up is at 949. 949 is a sell. Close of the candle. Look, it's going against me. Oh! And I get out by 10:04. Right? And then 10:18 is a full stop. Let's keep going. I'm having fun. Are you having fun? 10:29 comes. Another signal. We basically finish where we start. 10:29, we made it $54 or $1,000 per contract down first before it hit zero, before it came back to break even. 10:57, stop out, minus 26. Now we're above the moving average and we're long. Plus 18, we hit the stop, minus 14. Close below the moving average, hold it until 11:35, plus 5. Close above the moving average, hold it 1 minute until 11:43, plus 4. Now the other shenanigans are starting. Long at 11:50, out at 12:06. Close below the moving average, out at 12:14. 12:14 misses the stop, comes up and finishes 12:27 plus 3. 12:27 closes below the moving average, we finish slightly higher. 12:37 hits the stop, minus 20. 12:53 hits the stop, minus 20. 120 until 131 plus 30. 142 until 146 plus 13. Small loss here. 208. We're still going. 208 until 221. 235 until 245. 256 until 309. 323 until 331. And if you're a maniac and you're still trading after 330, it's minus 22. So if you go back and add all these up, what you're going to find, it's about 50-50, and there's more money made than lost. I didn't add all these things up. I'll get a calculator. Let me do this screen first. Calculator. I'm curious myself. 11 plus 49 plus 31 plus 0 plus 18 plus 5 plus 4.5 plus 24 plus 3 minus 4 minus 14 minus 26 minus 35 minus 12. So at this point, it's $142 per contract. 142 per contract right here. That's by 12 o'clock. Okay. From here to here. If you just followed a setup, that's about $2,000 per contract. Now we'll go this way, shrink it up a little bit. And let's see on this side of things what happened. 30 plus 13 plus 3 plus 20. There we go. Minus 22 minus 3.5 minus 4 minus 2 minus 20 minus 21 minus 1. Negative 34 in the afternoon. Minus 30, whoops. Minus $34. So Evan, if you just followed that one set of rules, which we published ahead of time, it's 108, right? Let's call it $100 per contract equals $2,000 hypothetical minus slippage and commissions and all that stuff. Evan, should this have made money at all? It's a lot of trades, right? It's a very simple system. It shouldn't have made any money at all, right? Now here's the bananas part. What's waiting for us on the right-hand side? Evan says, in today's gurus, it's blasphemy. I'm an infidel. I know. Nobody likes me. Evan, here are the times for tomorrow. Huh. That's weird. How do we have the times for tomorrow already? Oh. Do we have any more? Yeah, we have the ones for Monday and Tuesday and Wednesday. They're already here. This is a 5-minute chart, by the way. And as we go back in time, we can see when those calculations are made and published and put forward, it's kind of the same thing as the full moon, new moon stuff. We're getting that heads up in advance. And we have all these little nicky-nacky tools to tell us when the in-between moves are coming. Right? When there's a large gap in between signals, we can estimate where some of those moves are likely to occur and are still occurring. So what it's not doing, it's not lagging. It's not based on volume or price action or any of the other stuff. It's based on time. And we're not just looking at these markets, right? We can look at other markets. Here were the signals for gold, for example, for today. Did the gold market look random to you at all, Evan? Is the MA the only way to see trend with the system? Well, what's the problem with a moving average? Anybody? Yeah. It lags. Evan's like, listen, Lydick, you dropped the ball. Or did I? Or did I? Only there was a way to predict what the trend was going to do. If only there was a way. If someone had really thought about that. So we'll take away the moving average in gold. And Evan, there's another little tool here for know-it-alls like you who want zero lag called the trend identifier. It's a relatively new advancement. And if you click it and hit apply, some cool stuff starts to happen. So what it tells me, Evan, is this. Hey, at 6:45, we hit the sell signal stop. What might we infer, everybody, if the sell signal stop got hit about the potential trend in the future for gold? If the sell stop get hit, it's telling us maybe we should take longs. Nobody wants to sell. So from this point forward, Evan, we can only look at 720, only look at 920, only look at 1010, only look at 1125, only look at 1205, only look at 130, only look at 230 and 330 and 435. So, yeah, you smelled the ick of lag. You were like, you just served me a predictive steak with a lagging potato. Ugh, you ruined the meal. And I countered with, that potato is predictive too. Now, the only way this goes to a downtrend, Evan, is when one of the white lines is punctured. If that signal gets pricked by a tick, we're going to get a red signal. You can also treat this horizontal green line like a moving average. You know how some EMAs, Stephen, like a 50 period or a 200 or a 100, price tends to bounce off of them? Yeah, right. So you can use this the same way. And now, for example, say, I'm only going to take the 720 signal. I'm going to take the cross above the green line here as my entry. I'm only going to take the 1125, the 1205, the 130, the 230, and the 330, because all of these are above my predictive trend line. And that trend line is based off of the closing price of that sell signal. So we move entirely away from lag. Okay, so now we can do some pretty cool things here if we're looking at the predictive trend signal. Check this out. I'm going to come in, and this is just a little advanced stuff because some of you are existing customers here. And let's get rid of the reversal dots. Let's get rid of the timestamp. Let's get rid of, is there a way to turn the dots off? I know there used to be. Color bars. Stay with me. Let's turn off the dot price line. And default font. I know there was a way to do it. I always forget. By dot color, auto scaling dots. There it is. Dot size 1. Okay, so now Evan, check it out. We can, on the NQ now, let me get rid of my splits, those fibs that I drew. Evan, there's predictive trend signals. So on your 5-minute chart, we can use those signals as standalone entries, right? As a way to gauge what the trend is doing. So as long as I am below here, I'm looking for shorts. As long as I close above here, I'm looking for longs. You see how that actually plays out? I think it's kind of neat, right? There's a lot you can do with time once you acquiesce to, submit to the idea that it's useful, that these things are happening. It's only complex because it's different. It's only complex because it's new. So if I know when the signals are coming in advance, right? I drew those, Thomas, if we're above or below the line. What you're used to seeing, I'll show you what most customers' charts look like when I log on to their computer and I do training with them. I still do it sometimes. This is what most people's charts look like, right? Evan, what does any of that mean? Right? I don't know. I did this for years. Didn't get me very far. And so you're always following this thing that's telling you what happened in the past. And then sometimes you go, you know, it would be even better. More stuff. Is there more things? The computer's like, I got more things. It's like, well, if one thing is good, then a couple more things are good. Thomas said, it means you spend too much time watching YouTube. Yeah, it can mean that. And so I much more prefer, hey, when are the banks going to push the market higher like they used to? 405, 255, 215. And so now over here, just to kind of come full circle for you, we get rid of the moving average. Because of course you can. Does that make sense? Of course it does. What else can we do that we didn't used to be able to do last year? Can you predict where chop is likely to occur? Sure. If the computer sees that there are two signals within 5 bars of each other, if the computer sees that there are two signals within 5 bars of each other, 1235 and 1237, Evan, it's going to put a khaki box and measure what the price action was in between those two signals. It's saying, hey, you two guys are awfully close. Are you going to be choppy? Maybe. And then at the close of that window, it's saying, if it comes up into here, buy it. If it comes down into here, sell it. And now you can see where chop is anticipated. and either avoid those signals altogether or take longs and shorts based on those. So we can even anticipate where chop is likely to occur. And the bigger that number, 5, 10, the less signals you have to worry about. Okay, so I wanted you to see that. There's a lot there. You have the pattern numbers that show the potential reversals, the chop zones. But if we're just looking at it in terms of pure trend, the system told us if we use that filter to go short at 10:30 and to go short at 11:25, to go long at 2:15, go long at 2:55, go short at 3:55 and get stopped out. Now we're above this pseudo moving average, so we can go long at 4:05. All predictive, zero lag. Bazinga. The big one that we follow is the daily chart for the E-mini S&P. Last week in our webinar, we talked about how we had a pattern 4 on the 19th of April. And then we had a regular plain Jane that's, yeah, on the 24th here, another buy. If you remember our little trick here too, you'll see that we had a sell signal on this candle, and now we're moving into the next signal here on the 7th of May. So we got a little bit to deal with. We touched that 120 moving average, and now we're above it. So long on the 24th until the 14th of April. We can also look at other popular things like Tesla, for example. The template that I use for Tesla is the default value. I hate this guy. And then if we draw our little boxy box between here and here, you'll see Evan the pop up. And now we're coming into the next drive down until May 13th. So tomorrow into May 13th, we're looking for more shorts. Any stocks you want to look at while I'm in stock mode, everybody? Anything you want to pick my brain on up on the daily chart? Oh, Evan, this is a Fibonacci time extension, and I have 4 levels on here: a 33, a 66, a 0, and a 100. And there's a theory that says in time, I'm allowed to take any 2 signals. You see the one here on the 4th and the 8th? I can split time the same way you split price. You can split a swing into a 50% or a 62%. I can split time into thirds. So here I'm going to grab from the 4th and pull it out until the 8th. You see how I did that? When I do that, Evan, I have to preserve the oscillation of the signals, up, down, up, down, up, down. So if the first signal was a sell, the next split is going to be a buy. If the next split was a buy, then the proximate split is a sell. And what that helps me do is in the future, see intermediate signals when large gaps exist. You see what I mean by that? I just draw the arrows in by hand. But it's one of those things that you start to rely on more and more and more They're called harmonics. Time is a wave. It's based on vibration. And the harmonic that we're relying on is the third harmonic, or the second overtone. So I have the primary wave, blue to white. But if I just put a signal in the middle, Evan, what color would it be? If we just looked at that, you'd be like, is it brown? Is it green and red? Is it a brown signal? Is it a poop emoji signal? So if we go to the third harmonic, it preserves the oscillation, and we can see signals inside of signals. And so there's a really good chance that Tesla is going to drop now until the 13th as a result of that harmonic split. Kind of cool. All sorts of things that are available to you when we're focused on the signals, when we're looking forward in time. There's an element of predictability that really affects and changes people's perspective. It's about belief. Do you believe the markets are based on random information filtering to everyone at the same time? We all have access to it. There's no way to know what's going to happen. And so we all sit there, JP Morgan, Jamie Dimon, they all watch the screen and go, what was the unemployment report? I'm as surprised as that small person with no money. Or are we all reacting to information that institutions already had long before us? Are they pulling the strings and doing what they were always going to do? You know, Evan, how all reality TV is staged? You find out your favorite TV show was staged and you thought it was real. That's what my webinar is. It's a VH1 behind the music letdown. Womp womp. There's only one reality TV show I found that's real, by the way. It's called Alone on the History Channel. And they go up and they put these people in the middle of nowhere with a box of GoPro cameras, and they check on them once a week to make sure a bear didn't eat their leg. It is my all-time favorite show. And when that wife or that daughter walks out from behind the bush while he's standing there, he's like, you know, it was pretty bad when I got sick and I ate that beaver's foot. You know, I didn't know if I was going to make it, but I'm still here. And I boiled those beaver. And she's sneaking up behind him, and then he turns around and he just loses it. He's like, did I win? It's a great show. And if I ever find out it's not real, I'm going to have to do something. You might not hear from me anymore. But this is what we believe. I believe somebody knows these times in advance. I'm not the only person who's cracked the code. And so it's to our advantage to assume the game is rigged, to assume other people know these times, and to take advantage of that when it happens, right? And so I want to be a part of your team. I want, you know, to come alongside people like Evan and others, the rest of you as well. And I want you to learn everything that I know. So a lot of you have been helping out and writing reviews for me. Most of the reviews, Evan, are 4 and 5 stars for people that were sitting in a webinar just like you. There's one here, the guy, if you ever see this guy on the street, please punch him in the face for me. He bought the software, and then he told us he could only trade from 7 to 8 a.m. Eastern every day. He had a job he had to work, after we bought the software. We sat him down with one of our best customers who volunteered to show him his system and teach him his entries. And he spent probably 4 months with him. And then after a year later, he came back and said, if you don't give me my money back for a new program, I'm going to write a bad review, and held me hostage. And I said, I don't negotiate with terrorists. So if you ever see Alberto in the street, just punch him in the face for me. You have my permission. The rest of you are doing pretty good. You're learning nice things. You said nice things to say about me and the software, right? And so I want to be a part of that team. I want you to be a part of our family. Unless your name is Alberto, in which case I'm probably just going to punch you in the face. Just letting you know. We think time is the most important thing when it comes to trading. I'm all in on it. That's all I've done is study time for 15 years. Stanley wants to look at soybeans on a daily chart. Stanley, where were you a minute ago when I asked you about that stuff? Let's take a look. Stanley. Stanley. My soybean analysis. Stand by. Stanley, we are inverted right now. We are in an Omnia trend reversal. The signals are inverted on the orange wave. The last harmonic within the harmonic went down and then went up, which means we are rising, Stanley, until the 6th into the 7th. We are rising from the 6th into the 7th. And Stanley, when we get near a bottom in price action, the signals begin to reverse. You see how it went down on the 25th, up on the 11th. If we say this was down, it's a pattern 4. And then that means right here, we're calling that a long and then a short. If I take this split now and I copy it this way, it was down here and up here. So Stanley, I'm going to make a screenshot and show this to you. Okay, is that okay with you? That's an advanced analysis, but I want you to see it. Take a look at it. Let me know when you get that screenshot. Click on it for me. I think I have you in my Skype too. I do not. I'm not seeing you on Skype. That's okay. But that's my analysis of soybeans. We had a trend reversal, and if you follow one, there should be a head to the left. Where's our trend line? There's an emerging trend line. It could be here. It's most likely here. So we're still backwards, Stanley, as long as we're under that trend line. We have to close somewhere above 1225 for things to start getting normal. But yeah, man, any questions like that, please ask me. I'm happy to do analyses like that for you. No, you're welcome. We're going to give you the software. We're going to teach you the setup. You get the workspaces and the templates. There's training involved. You're going to get a discount today. But more often than that, Evan, everybody, I'm going to tell you the truth. This is information. There's ways to put spins on it and make it it's too important to lie to you and do all the guru stuff. I don't want to be that way with you. I want to come here every week and ask you the question: did the times we gave you in advance do the things that we said they were going to do? If we apply advanced techniques, will they do the things that we're expecting them to do? And if the answer is yes, you're one click away from being an amazing review on Trustpilot. The program we're talking about is Tachyon Warp. If you click on that in our product store, it's the one everybody starts with and usually stops with. You can click on this link. There's a promo code. I'll get it for you here. The promo code when you sign up is WARPF. If you use that promo code, it takes off $500. So, Evan, unless you want to give us $500 extra, please use the promo code when you sign up this afternoon. That includes video training in our archive. It includes free installation. It includes 2 lifetime licenses. It includes lifetime updates on the program, which come once or twice a year, and access to our Skype group. We have a Skype group for the Warp users, this community right here. And you guys have been great about supporting each other in there. John, who just wrote his last review in here, you can see Evan in one day, he made $520 using the program, and those customers are in here sharing their results, sharing what they do and how they do it. And most popularly traded markets are the ES and the NQ in there. All right, any questions about that? Before we wrap it up for today, I went a little bit over, sorry about that. If you get an email or a phone call from a suave sounding gentleman named David Kern, Dave works with me and helps customers onboard, answers questions that they have, and get over any obstacles that are between them and moving forward. So if you get an email or a phone call from him, it would be in your best interests to answer and hear what he's got to say. Dave's a customer himself and uses the program for options trading. If you have questions about that and looking at options trades. I do have a live trading room. When you click on the Buy Now button, Robert, you'll see that I meet with customers Tuesday, Wednesday, Thursday from 9 to 11. Evan, Ninja is a broker. I don't recommend, if you don't use Ninja, there are multiple ways to get data for NinjaTrader. For example, you can get an Apex account, and Apex will give you access to futures data that you can then plug into NinjaTrader for like $10 a month and see the signals. So there's lots of ways to get, yeah, so you're gonna go, if you go to anywhere online, these guys, whoops, Apex Trader funding discounts. So if you sign up here with promo code Pathway, then you can go to their website and we'll help you with this. Customers will help you. You can sign up, for example, for their like their 50K account. Come on. They want you to use the big one, obviously. So if you get a 25K account, 167 times 80% off is what? Let me check. $33 a month. And you get to play with, and you get to try to qualify for an account. 150, it's even less. So it's probably like 20 bucks a month, 30 bucks a month. So there's ways to do that. Robert, we do have a bot that we're working on. Right now it's being used by a select group of early adopters. It's called Optimus. Optimus is soon to be released at some point in some form. It will be released on a lease basis only if we release it. So we're working on it right now. But fun fact, you have to be a Warp customer to even use Optimus. So you got to eat the appetizer, Robert, before you have the fillet. That's about as salesy as I get right there. I love you guys. I love doing this. Thank you so much for allowing me to stare at the same blade of grass for 15 years and bring back these insights to you. Thank you for sharing your success stories with others in the Skype groups and in the Trustpilot reviews. It means a lot when other people can see what your journey was and what your experiences have been on the other side of the fence. It means more to me and to everyone here than you can know. Please continue to post those reviews and let others see what you've experienced from both sides of the fence. As we go, may the wind be at your back. May the sun shine on your handsome, beautiful faces. May the valley rise up to meet you and the mountains lay low before you on your journey. I honestly, truly wish you peace in your travels in pursuit of this. I wish you joy, fellowship, fulfillment. I want you to stand on the mountain and claim that success that you've been chasing after. We're really good at that part, helping people get there with a tool that I think has withstood the test of time. 15 years we've been around, just getting better and better. I believe in you. I think you're doing great. Every day you learn a little bit more. You're right on schedule. You're doing fine. Don't be discouraged. But remember also, you don't have to do this alone. You don't have to do this alone. You can be in a community of users who've gotten further down the road than you, who want to help, and I'm always here, almost 24/7 if you need assistance. So please move past the transaction, get to the other side, and let's do some incredible things together. Thanks again for all of your attention this afternoon. If you have any questions, please reach out. Michael, Michael, at backtothefuturetrading.com. Remember, the market you trade is not random. You can know times and in directions in advance to anticipate when institutions like Goldman and JP are about to push through the stops up and down over and over again and not be a corpse in the stampedes that they create each day. We have the times for tomorrow, Monday, Tuesday, Wednesday, and Thursday ready to go. And I see no reason why they won't work as well as they did yesterday and today in the great experiment. Be great, be kind to one another, and I will see you here Monday, Tuesday of next week in my advanced training room, 9 o'clock sharp. And if anyone has any questions, hit me up on Skype. I'll let you know, whatever it is. I'm your Huckleberry. Have a great night, everybody, and welcome on board to our new customers.